In this video, we'll go over our list of the 12 dividend stocks that are the best to buy now and hold forever. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. The best investment strategies for a long-term tax-paying investor are those that focus on passive income. Even when the market isn't good for most stocks, strong long-term returns may be possible with investment portfolios that include reliable dividend stocks. Also, if a company can consistently pay a dividend and raise its payouts year after year, this is usually a sign that the company has a stronger balance sheet and makes more money than companies that don't pay dividends. Stable dividend stocks like Exxon Mobil, ticker XOM, Chevron Corporation, ticker CVX, and Pfizer Incorporated, ticker ABBV, are usually among the few securities that investors never get tired of. This is because dividends make up more than 40% of the total return of a company. A Morgan Stanley book on dividend investing says that this trend has been clear for more than 90 years, up until 2015. In the past, these stocks have also done better than similar stocks that don't pay dividends. From 1991 to 2015, dividend-paying stocks did better than stocks that didn't pay dividends. The average annual return for dividend-paying stocks was 9.7%, while the average annual return for non-dividend-paying stocks was 4.18%. Also, between 1991 and 2015, stocks that consistently raised their dividends every year did better than the S&P 500 in 17 of the 23 years. A report on the BlackRock Equity Dividend Fund from April of this year also showed that the dividend stocks in this fund did better than the S&P 500 over the 12 months that ended on April 30, 2022. A Barron's article from May 2022 said that between 1999 and 2019, dividend-paying companies with high payout ratios had an annual return of 10.9%, while companies with low payout ratios had an annual return of 6.6%. Based on their solid dividend stocks and potential for long-term growth, we selected the companies on our list. Let's review our 12 Forever Dividend stocks to buy now. Number 12. AT&T Incorporated, ticker TAT&T, is a stock with staying power, and has increased its dividend each year for the last 36 consecutive years. This entrenched telecom has also streamlined its operations recently, spinning off its stake in Warner Bros. Discovery Incorporated to pay down debt and focus on the core business of telecom. Shares are roughly flat on the year, but have surged about 35% from their October lows as proof that Wall Street likes what it sees as we enter the new year. As a classic risk-off stock with a generous dividend and staying power, this is definitely the kind of income investment you want to buy and hold forever. Number 11. Pfizer Incorporated, ticker ABBV. Spun out of parent company Abbott Laboratories, ABT, in 2013, ABBV took control of branded biopharmaceutical products to forge its own path without the stodgy and lower-margin business of medical devices and consumer health products. Since then, ABBV has more than tripled to outperform the remaining ABT business. Pfizer has worked hard to keep its product pipeline full of profitable treatments, including the company's Freestyle Libre glucose monitor for type 2 diabetes patients, which should hit $4 billion in sales this year. Thanks to a strong outlook, several industry publications predict ABBV will eclipse all other competitors to be the biggest pharmaceutical company in the next 5 years. With recession-proof drug sales and scale that's unmatched, it's hard to imagine a world without Pfizer in it. Number 10. McDonald's Corporation, ticker MCD. McDonald's Corporation is a consumer discretionary company operating in the restaurant business. It operates and franchises McDonald's restaurants in the US and abroad. The company is based in Chicago, Illinois. On October 20th, Jeffrey Bernstein at Barclays reiterated an overweight rating on McDonald's Corporation shares. The analyst also placed a $270 price target on the stock. In October 2022, McDonald's Corporation beat estimates in the third quarter and rallied in the market. The company's global comparable sales were up by 9.5%, compared to the 5.8% consensus estimate. U.S. comparable sales were also up by 6.1%. According to Valuantum analysts, a compound annual revenue growth rate of 6.2% can be expected from McDonald's Corporation during the next 5 years, which is a significantly higher figure than the company's 3-year historical compound annual growth rate of 3.4%. The company's goal to become 95% franchised in the long run will also help it avoid inflationary pressures and most operating problems. Bridgewater Associates was the largest stakeholder in McDonald's Corporation in the second quarter, holding 2.1 million shares, worth about $511.4 million. In total, 58 funds were long the stock with a total stake value of $2.7 billion. McDonald's Corporation, like Exxon Mobil Corporation, Chevron Corporation and Pfizer Incorporated, are among the most reliable dividend stocks in the market today. McDonald's dividend yield as of November 2022 was 2.23%. Number 9. PepsiCo Incorporated, ticker, PEP. PepsiCo Incorporated is a consumer staples company that manufactures and distributes beverages and convenient foods across the globe. The company is based in Purchase, New York. Some of its products include dips, cheese-flavored snacks, and soft drinks under brands such as Pepsi and Quaker Foods. An overweight rating was reiterated on shares of PepsiCo Incorporated by Lauren Lieberman at Barclays on October 14. The analyst also raised her price target on the stock from $183 to $185. The company has raised its dividend consistently for the past 50 years and has a 5-year dividend growth rate of 7.39%. PepsiCo Incorporated also commented this October that it is hiking its EPS and revenue forecasts for the year by 2% each. There is also an increase in the forecast for organic revenue growth, bringing it up to 12% compared to the previous 10% guidance. Analysts have a consensus outlook for 7.3% annualized EPS growth for PepsiCo Incorporated over the next 3 to 5 years, based on the company's impressively stable EPS growth in recent years. The company also benefits from its position in a defensive sector, consumer staples. The Consumer Staples Select Sector SPDR ETF has returned -1.47% over the past 12 months, compared to -16.5% for the S&P 500. PepsiCo Incorporated is the second largest holding in this ETF. PepsiCo Incorporated was found among the 13F holdings of 62 hedge funds in the second quarter and 60 hedge funds in the previous quarter. Their total stake values were $4.9 billion and $4.6 billion, respectively. PepsiCo's dividend yield as of November 2022 was 2.53%. Number 8. ColgatePalmolive Company, ticker, CL. ColgatePalmolive Company is another consumer staples company on our list, operating through its oral, personal, and home care, and pet nutrition segments. The company offers products such as toothpaste, mouthwash, bar, liquid hand soaps, and more. It is based in New York City. Steve Powers at Deutsche Bank holds a buy rating on shares of ColgatePalmolive Company as of October 17. The analyst also placed an $85 price target on the stock. ColgatePalmolive Company is one of the most stable dividend stocks in the market today, having raised its yield for the past 59 years consistently. In October 2022, the company raised its organic sales growth guidance from 5% to 7%. Third Point Investors acquired a large position in ColgatePalmolive Company in October, stating that the company is defensive and had significant pricing power in inflationary conditions. It also has specific businesses that are highly profitable, such as Hill's pet nutrition business. Hill's has grown its organic sales by 11% to 12% over the past few years. The company's dividend yield as of November 2022 was 2.55%. Number 7. The Home Depot Incorporated, ticker, HD. Home Depot Incorporated is a consumer discretionary company offering home improvement products. The company sells products such as building materials and lawn and garden products in its retail stores across the U.S. It is based in Atlanta, Georgia. Citi analyst Stephen Zacconi holds a buy rating on the Home Depot Incorporated shares as of October 31. The analyst also placed a $340 price target on the stock. Home Depot Incorporated has been raising its dividend for the past 12 years in a row, making it a steady dividend-paying stock for income investors. The company's management team has also performed well in the current market environment, raising profits and revenues. Home Depot Incorporated had revenue of $82.7 billion in the first half of 2022, which represented a 5.2% increase compared to its revenue in 2021. The company also saw a 4.1% rise in comparable sales during this time. There were 75 hedge funds long on Home Depot Incorporated in the second quarter and 68 hedge funds long the stock in the previous quarter. Their total stake values were $5.6 billion and $6.1 billion respectively. HD's dividend yield as of November 2022 was 2.57%. Number 6. Merck & Company Incorporated, ticker, MRK. Merck & Company Incorporated is a healthcare and pharmaceutical company operating worldwide. It offers human and animal health pharmaceutical products. The company is based in Kenilworth, New Jersey. In October of 2022, Morgan Stanley's Terrence Flynn reiterated an equal weight rating on Merck & Company Incorporated shares, and raised the price target on the stock from $91 to $100. Merck & Company Incorporated has raised its yield for the past 11 years without a break and has a 5-year dividend growth rate of 9.01%. At the start of 2022, the company offered strong guidance for 2022 with sales at $56.8 billion and earnings at $7.20 per share. Merck & Company sees its full-year sales between $58.5 billion and $59 billion. Merck's dividend yield as of November 2022 was 2.73%. Number 5. The Coca-Cola Company, ticker, KO. The Coca-Cola Company is a consumer staples company offering non-alcoholic beverages across the globe. It is based in Atlanta, Georgia. A buy rating was reiterated on the Coca-Cola Company shares in October 2022 by Peter Grom at UBS. The analyst also raised his price target on the stock from $63 to $68. The Coca-Cola Company is one of the top dividend payers today, having raised its dividend for the past 60 years consistently. It reported revenue growth of 11% for the third quarter, including a 4% growth in concentrate sales. Since the company is also a defensive stock, being in the consumer staples sector, it is considered a strong play in inflationary times. Out of 895 hedge funds tracked in the second quarter, 64 funds were long the Coca-Cola Company. Their total stake value was $29.2 billion. Coke's dividend yield as of November 2022 was 2.94%. Number 4. Chevron Corporation, ticker, CVX. Chevron Corporation is an energy company engaged in conventional energy operations worldwide. The company is based in San Ramon, California. Charles Rye, an analyst at Cowen, holds an outperform rating on Chevron Corporation shares as of October 31st. The analyst also raised his price target on the stock from $160 to $185. Chevron Corporation's dividend growth history shows consistent dividend increases over the past 34 years and a 5-year dividend growth rate of 5.33%. The company has been performing well relative to the S&P 500, with its shares rising 121.5% so far this year, compared to the S&P 500's 19.2% gain. In total, 53 hedge funds were long Chevron Corporation in the second quarter and in the previous quarter as well. Their total stake values were $27.9 billion and $6.5 billion, respectively. Chevron's dividend yield as of November 2022 was 3.14%. Number 3. Exxon Mobil Corporation, ticker, XOM. Exxon Mobil Corporation is another energy company on our list, based in Irving, Texas. It explores for and produces crude oil and natural gas in the U.S. and internationally. Truist Neil Dingman has a hold rating on Exxon Mobil Corporation shares as of October 2022. The analyst also raised his price target on the stock from $111 to $114. Exxon Mobil Corporation has been attracting investor attention since posting its third quarter sales of $112 billion and operating profits of $25 billion. The company is seen as a growth and safety play for most investors hedging against geopolitical turmoil and energy crises, in light of its yield and positive performance. Exxon is a dividend aristocrat, having raised its dividend consistently for 25 years. Exxon's dividend yield as of November was 3.18%. Number 2. Pfizer Incorporated, ticker, PFE. Pfizer Incorporated is a healthcare and pharmaceutical company selling biopharmaceutical products across the globe. The company is based in New York City. SVB Securities analyst David Risinger holds a market perform rating on Pfizer Incorporated alongside a $48 price target. The company has raised its dividend yield for the past 12 years consistently, making it a reliable dividend stock in the healthcare sector. Recently, Pfizer Incorporated also raised its 2022 earnings guidance to $34 billion, representing a $2 billion increase from the previous figure. It has also revised its revenue and adjusted EPS guidance to $99.5 billion to $102 billion compared to consensus estimates of $99.6 billion. Pfizer Incorporated was found among the 13F holdings of 79 hedge funds in the second quarter and 83 hedge funds in the previous quarter. Their total stake values were $4.1 billion and $5.1 billion, respectively. Pfizer's dividend yield as of November 2022 was 3.44%. Number 1. Devon Energy Corporation, ticker, DVN. A buy rating was reiterated on Devon Energy Corporation shares on October 21st by analyst Scott Gruber at Citigroup. The analyst also raised his price target on the stock from $77 to $80. Devon Energy Corporation stands to gain from rising energy prices and hiked natural gas and oil production levels in the U.S. The company also increased its dividend by 22% to a record high of $1.55 per share in the second quarter. It has been raising its dividend for the past 4 years in a row. Our hedge fund data shows 66 hedge funds long Devon Energy Corporation in the second quarter. Their total stake value was $1.9 billion. Devon Energy's dividend yield as of November 2022 was 6.02%. These companies are safe bets that are set up to do well in the hard economic times that are coming in 2023 and beyond. Analysts think that now is the best time to buy a lot of these stocks. This concludes our list of the 12 best dividend stocks to buy and hold forever. Which of these dividend stocks do you think are good long-term investments? Let us know in the comments below. Don't forget to like this video and subscribe to our channel for weekly updates on the top stocks to buy and wealth-building investment strategies. Thank you for watching, and happy investing.